G'day folks, Simon here with your Tao Daily as of market close, Monday the 19th of May 2025. A lot of ink was spilled, or dare I say wasted, writing about the Moody's downgrade of US debt on Friday. Now, Moody's is just joining what S&P did back in 2011. And that came to the market as a shock. It was also going through a bit of a European crisis at the time, and also what Fitch did in 2023. So my argument was that the Moody's credit downgrade, it was really a bit of a nothing burger, a little bit of a reminder, but nothing terribly major. And certainly markets seemed to shrug the news off on Monday. So we can see here the S&P's closed green, just only up 0.9%. But that was a pretty strong intraday rally. They rallied more than 1% off their lows. And I think to close green the day after the news was absorbed of a US credit downgrade shows inherent bullishness in the market. What was even more impressive, I think, was TLT. Now, TLT is the most liquid long bond ETF, or certainly the most liquid for options trading. Now, even though it closed down slightly on the day, it was down 0.29%, it rallied nearly 1.5% from its lows, and you can see so far it's holding support. So I'm long call options in TLT here. Everybody hates bonds at the moment, but I think they are due for a counter trend rally. Let's have a quick look at the VIX. So we've seen a real collapse in volatility. In fact, it's the biggest, well, the most rapid decline in volatility the VIX has seen in its history. Okay, it picked up a little bit on Monday. That's nothing terribly concerning. Closed at 18. When we've got a VIX below 20, that generally signals we're in a buy the dip type of an environment. Now, I still think a dip would be healthy. If we could close that big gap that we had on Monday, if that gap could get filled in the next couple of weeks, we pull back to the mean, I think that would be a healthy development. But right now, from what I can see, that is a dip that should be bought. Now, if we don't get a dip between now and late May and the market just continues to grind higher, at that point, I would certainly start to lean a little more bearish. But right now, based on what I can see, things look pretty okay. Let's have a quick look at HYG as well. HYG, you can see, is holding above its 200-day moving average. That's also good news. We don't need HYG to be racing to the moon in order for equities to hold up. We just need it to not do this. Okay, so I'm not seeing any great cracks appear in the market. Like I said, I'd love to see a gap fill here. I think that would give us a good buying opportunity. If it doesn't happen and the market continues to press higher, well, at that point, yeah, I would start to lean a little more bearish and would look at some hedging strategies. That's what I got for you today. I hope it helps, and I'll catch you next time. Thank you.